Crypto bear market is well and truly here. As someone who has gone through these cycles in the past, let me tell you that these conditions can lead to extraordinary investment returns for those who stick around. Hi, I'm Matt Williamson, Head of Research at Collective Shift, where we share the latest and best crypto advice and analyses to help you create more wealth and freedom. In this video, I'll be sharing 4 bear market tips for crypto investors. I'm confident that these tips can help you along on your own investment journey. Before we dive in, if you are enjoying this video, please like it and subscribe to the Collective Shift channel. Also, make sure to turn on your notifications in order to get the latest content from the Collective Shift team. Also, if you are an investor wanting to go deeper into the world of cryptocurrencies and NFTs, make sure you check out the video description below for a special code to the member platform. For these 4 bear market investor tips. Number 1 is to review your past performance as an investor. It's probably best to start from the cycle, so maybe from the lows of Bitcoin to the recent highs that we saw in November 2021, or alternatively from the moment you entered the crypto market if you are perhaps someone who hasn't experienced a whole cycle. It is just crucial otherwise you run the risk of repeating perhaps these mistakes or oversights that you have been making. Some key questions that I would encourage you to ask yourself is simply, what investment decisions were successful and what ones were unsuccessful? For the unsuccessful decisions, really get into the weeds of what was behind that perhaps unsuccessful investment return. Were there some assumptions I was making that turned out to be invalid? And that would really help you, I suppose, learn by the time the next bull market comes, which I am extremely confident will happen. Some other questions you might want to ask absolutely should revolve around your investment plan. Firstly, ask yourself, did you have an investment plan? And if you did, how closely did you adhere to that plan as the cycle and the volatility within the market happened? If you didn't have a plan, ask yourself why that was the case, and then an action point there would be to definitely strongly consider creating an investment plan in readiness for the next bull market. Other questions you might ask have to do with your assumptions based on some fundamental trends happening in the crypto space. A great example from the past couple of years had to do with Ethereum's gas prices. There were assumptions there that this was really bullish for Ethereum because there was a lot of ETH being burnt, helping reduce the supply. And there was also the assumption that it was reflective and demonstrated how much demand there was for Ethereum block space. That assumption turned out to be invalid in the sense that it made these sorts of investors neglect all of these alternative blockchains, which had much less cost prohibitive fees. So it was cheaper to use, the likes of Solana and Avalanche. And in turn, these sorts of blockchains and their native tokens, such as the SOL, which is the Solana native token, or the ticker for it at least, and AVAX, which is the ticker for Avalanche's native token, they performed extremely well. And for those who had the assumption that, hey, high Ethereum gas fees are great for Ethereum and all the rest of the competitors aren't going to do well, for those sorts of investors, that assumption led them to forego and miss out on potentially life-changing returns depending on how much they would have been investing. So question your assumptions in the past and learn from them is my strong tip for bear market tip number 1. On to number 2, it would be, my tip here is to appreciate how hard it is to catch a falling knife. The key word here is to appreciate. I'm not telling you to attempt to do it or to not. That's totally your decision. But just understand how hard it is to catch a falling knife. For those of you who don't know what I'm even talking about, catching a falling knife is just lingo for trying to time the market bottom. So when Bitcoin or ETH or any asset is tanking in price, catching a falling knife is basically trying to time it on the way down and put all your money in at that point under the assumption that will be the lowest price that that asset will hit for that cycle. If you just look back at Bitcoin's price history, there are several moments where you could, in retrospect, like have thought that this was the market bottom. You could have deployed all your available capital that you were wanting to deploy in this asset class. And then, as it turned out, you could have eventually made a very, very poor investment decision, because even just looking back to February 2018, when Bitcoin crashed all the way down to 9,000, which it seemed, very scary at the time. If you thought, okay, that's the market bottom, and put it all in, 6 months later or 12 months later or so, the price of Bitcoin had gone down by another 60 to 70%. So just appreciate how hard it is, and then consider, if you are one like me who doesn't like your odds in terms of catching a falling knife, consider some alternatives such as dollar cost averaging. So buying a certain amount of BTC or ETH over a 3-month period, for example, or consider some other alternatives that are similar. Bear market tip number 3 for crypto investors is to use tokenless blockchain apps and protocols. Tokenless apps and protocols, what am I talking about? It is a project, a blockchain-based platform or app that does not yet have a token. In the previous bear market cycle, for anyone who stuck around through 2018 and 19, they were very quiet, very difficult periods in terms of investment return. However, those participants who actually used these apps that were coming out that did not have tokens, they turned out to make life-changing amounts of money just by, money equivalent in terms of these native tokens, just by participating and using these protocols. So looking even here at this Dune Analytics dashboard prepared by Masari, if you had used all of these apps and protocols throughout the bear market and had received these airdrops because you'd used it, you would have received almost $110 worth of these tokens when they did airdrop you. That's under the assumption that you sold it 1 week after the airdrop. If you sold it 2 weeks after the airdrop, it was 93,000 USD, and then 78,000 if you sold it 1 month later. I guess the crux of what I'm saying, the numbers aren't too important there. You can see that it's seriously large sums of money. But for those of you who were in that bear market period, the likes of Uniswap, 1inch, DYDX, and many others who did not have a token then, all of their early users were made eligible for this airdrop, and years later received these tokens. So that's a massive tip, a very, very important tip that I have for surviving the bear market and thriving in it financially. A secondary benefit from using tokenless apps and protocols is more educational. So using the likes of Uniswap when it was very early had massive implications and educational value for understanding automated market makers, or AMMs, which were basically one of the key innovations that really pioneered and this movement of DeFi that we saw in the last 2 years or so, where a lot of these solutions were built using AMMs. So again, the educational value of getting into these apps and actually using them is immense, let alone the financial returns you can generate by receiving the airdrops down the line once these protocols do tokenize. If you're wanting to know a list of these currently tokenless protocols and apps that we at Collective Shift think are great contenders for tokenizing in the future, be sure to check out our website for free here, collectiveshift.io/airdrops, where we go through and rate and rank the most likely protocols and apps that we think will tokenize. And for members, we also break down what each individual Collective Shift analyst has as their top 5 that they're personally, what actions they're taking in order to hopefully secure eligibility for the airdrop when it happens in the future. bear market tip number 4 is to educate yourself. If you are convicted or you are interested in the potential applications of blockchain technology and how cryptocurrency, NFTs can be used in the future, and why there is so much capital and talent coming into the industry and working on these solutions, then I definitely encourage you to take advantage of the vast amounts of free educational content that is out there that covers everything you need to know about all the aspects of cryptocurrency that there are, of which there are many. So on the Collective Shift platform, for example, this is one of the places you can go to for free educational content. Here is collectiveshift.io/resources. You can see a bunch of free material here for beginners as well as intermediate and advanced users in the crypto market. I would also recommend heading and checking out our free beginners course, which you can access by heading onto our website as well. And again, just understanding, taking this bear market time to educate yourself can help you as investors by understanding, I suppose, what proposed benefits there are, what are some value propositions of certain blockchain projects or crypto projects. And it can definitely help you by the time the bull market comes next time. You can understand, what things are being hyped up, what kind of value propositions are gaining traction, for example. So that is a strong recommendation I have there with bear market tip number 4. And just to summarize the 4 bear market tips that I did have here, number 1 was to review your investment performance. Number 2, appreciate how hard it is to time the bottom or catch a falling knife. Number 3, use tokenless apps and protocols. Number 4, educate yourself. My action item for you is to just immerse yourself and just resonate with these 4 tips. The most actionable one, I would recommend starting with reviewing your own performance in the past cycle, ideally the past 1 or 2 years, what decisions you made. That's definitely my strongest advice there. And my ask of you is, what are some other bear market tips? If you did want to leave some comments below, what are some bear market tips that you have and you are trying to apply as we go through this bear market period together? Just a reminder, if you do like this video, please give it a like, comment below, and I'll reply to any questions you have. Subscribe to the channel and also turn on your notifications. And be sure to check out our other videos for more on this and other crypto advice from our team.